series for this year. By this year, I mean the financial year, not the calendar year, because we're just into February. So I don't want to confuse anyone with financial years and calendar years. Us accountants have the habit of doing that. Alrighty. So no one wants to see this. Like, guys who are here in person, we've got another 100-odd people online. So that's why we're sharing it. So there are going to be questions online or things like that. All right. So if you've got a question, just ask, shout, and we'll go through them. All right. So on this nice Valentine's Day, we're going to show our companies a bit of love, and it's it's an important thing. A lot of us entrepreneurs forget to love our companies because it gives us so much headache. And so for the people who've been part of this actual series, you've seen the journey we've taken from March last year, and we've moved forward right the way through the year of owning a company. And that's kind of what we do. Is like it's essentially a year in the life of a company. We take you right from what sort of business do I want, what registrations do I need. We've gone through tax, we've gone through budget planning, we've done labor, we've done social media, online marketing. And now this is the end of the financial year. So for most actual companies, you culminate to the end of February, and then you'll normally draft your financials. This is when SARS wants whatever tax you owe them. They're going to want it at the end of this month. Okay, so why we want to tie it in now, why we're doing this talk now in February, around your annual financial statement. So every company must prepare a set of financial statements. And as it indicates, annually, so once a year. Okay, so we're going to just run through some of the finer stuff. You guys have heard a lot of these points over the course of the last year. For people who've been here for 2 years, you've heard it for 2 years. Gentlemen. Yeah, so we should go through the steps. So stop me if there's something you don't understand. Stop me if there's something you want to add to it. And then what we're going to do is from next year, because people are getting a bit tired of seeing my face, Londi over here, who is based right here inside the business center, he will be taking over these talks next year. And we will then just be supporting Londi. I'll be sitting in the chairs, and then Londi will be here doing all the nice stuff, Yeah, so next month, so as of next month. So Mlondi is way more articulate, he's handsomer, he knows more things than me, so he's taking over the process. Cool. Alrighty. Annual financial statements. As I alluded to a little bit earlier when we started our chat, so it's your financial statements, so it's effectively reporting what has happened in your business over the last 12 months. So what income did you earn? What expenses did you incur? And what is left over at the bottom? Do you have a profit? Hopefully. If you have a business and you don't have a profit, it's a hobby. So we don't want to be doing that. We want to be making money. And if there's a profit, SARS wants tax. That's very simply put. And we want to go through these. A lot of these things we have spoken about, as I said. So this is not a very in-depth talk. I'm going to go through it because I really want you guys to ask me some stuff, because we have looked at this in the August chat. Okay. The key for financials for us, and what you should view it as, is it's a tool for you to understand your company. That's the biggest thing for the actual financials. And we like to look at it monthly. Remember in our August chat, we looked at management accounts. So your monthly management accounts that you'll look at and review every month culminate up, they roll up, all those 11 months roll up into the 12 month now. So for a lot of SMEs, a lot of startup entrepreneurs, This is the first time they see their books. They haven't looked at monthly management accounts. They haven't looked at the income statement. They go to their accountant because they need a tax clearance, or they need the bank wants for financials, for funding or something like that, and they bring a bag with all their slips in, and the accountant quickly puts something together, and this is the first time you see it. Like, holy shit, is that what I did? Surprise. And often it's too late to fix anything or do anything. All right, so that's why we've always worked throughout the year, showing you the different steps for each one. So it's supposed to guide you. Am I making enough, or is there sales? Yes. What's the cost of sales? Do I have enough gross margin to cover my OPEX and to pay myself? Because you want to pay yourself. You guys would be aware of that in terms of what we call. That was unexpected. I think they switched the generator off. Sorry, let me just check with the guys online. Ed, are you guys still online?
Yeah.
Yeah, well.
All right, sorry, there was load shedding down here at Kings Park, so they've switch the generator off. Just give us a sec while we while the power comes on here.
Great, we can still see your screen.
No, that's good. It's off for us this side, so I want to just, I'm glad you can still see it. I'm going to turn on the projector so the team here can see. Yeah, no, I figured that out. Thanks, Mandy. Sorry, it just... While we're waiting for this to turn on and heat up, let me just remind everyone, we do record these. Now, Ken, it's coming on now. We do actually record these. So remember, this one's going to be a bit interesting because it's going to have this whole interruption in between. We do record these. So Edward is currently recording each of these talks, making nice notes. So we do record them. So what you can do is get onto our website and you can watch all the past videos as well. If you haven't watched them yet, if you missed the series so far, and it'll be a good way for you to obviously catch up and get a better understanding as to where we are now in terms of the annual financial statements. So this talk will probably be up on Friday already, so it's very fast to turn around. Ed's on board with that. Thanks, Ed. Okay, so purpose of annual financials, as I was rudely interrupted, is to give you advice, to give you guidance. You shouldn't only be finding out now in February that you owe SARS money. It's too late because then you're wondering, where the bloody hell am I going to get the money from? You know, all of our clients get informed next week if they owe SARS money or not, so they can at least plan to get it out of the bank or get a loan if they need a loan, whatever. So you shouldn't be finding out now. It's too late to find out now. Okay, so, and that's what it is, to help you guide your thinking, guide your strategy. Because with this being the end of the financial year, March is the start of the new financial year. So you want to take your learnings from the previous year. What did I learn? How have I improved my margins? Have I not improved my margins? And apply that into the year we're going into now, March. Anytime you're ready there, Ken. Okay. So a lot of these, so this is one of the decks, and I've chosen this one. It's a deck we use internally with our staff to train. These are the things we look at when we're doing our clients' books. Okay. So as I highlighted earlier, help you make the right calls inside your business. That's what you're looking for. Okay. Your investors, if you want someone to fund you, DTR, your uncle, anyone who's going to fund you, they want to see it, that they want to know they can get their money back. Okay, so that's important. Financial institutions, banks, as we've seen, they want to see it just to make sure that they're not throwing their money into a deep hole. And then obviously SARS. SARS wants to see it. Even if you're making a loss, even if you've got no tax to pay, you must submit your tax return. Please, guys, don't make the mistake of going, I don't owe any money. therefore let me not submit my tax return. So also put admin penalties, and it might be 200 Rand or 2,000 Rand. When you look back again, there's you owe SARS 10,000 Rand for nothing, all because you didn't get someone to go on and go, no return, submit a tax, please, please. So you can have no profit, owe no tax, and have a fine that you owe SARS for no reason whatsoever, just because you haven't actually done it. So if your bookkeeper, accountant stuff says, don't worry, don't. That form has to go in, please, please. Okay, so this is what you get it for. This is the sort of guideline. Okay, generally what you need to really want to be doing is your management accounts throughout the year is where you're looking at it on a regular basis. You know, this is just to confirm what the year looks like. And when you start making those final tax tweaks so that you're paying less tax to SARS, this is where you want to be taking it. Okay. So these are the important things that your accountant or your actual bookkeeper will be asking you for. Then you need your bank statements to check your opening balance, closing balance. Because those things, the SARS is going to audit you, they're going to check those things. That's a tie up to the real world. Okay. So generally we'll have your bank statement, and we'll know what your opening balance was, we know what your closing balance was, because you reconcile that to track the money in and out. Okay. The debtors are important. Those people who owe you money. So you've now gone and invoiced a whole lot of people. Hopefully they've all paid you. You don't have any debtors. Life's fabulous, but generally it doesn't work that way. Invariably, there are going to be people who you've done work for who haven't paid you. You've got two choices with that. One would be, obviously, if it's a short-term thing, or if you realize they're not going to pay you. You know, because some of you guys are new here, you haven't, you might not have seen, there's only 3 reasons a person doesn't pay you. It's A, they never intended to. They wanted you to do the work for free, so they told you a story, and you've done the work, and they were never going to ever pay you. So identify who those guys are. There are some people who haven't paid you because they're not happy with the work. So they're protesting. They're holding the money. They're waiting for you to phone them. And then they go, yes, but you didn't finish this. And this is where the wall's skew. You go fix it. They go, yeah, paid. So protest. The third reason is they have a cash flow issue themselves. They're waiting for money so they can pay you. Okay, those are the only 3 ways that people don't actually pay you. There's no other way. There's no long laundry list of things. Okay, so understand what it is. If it's people who are never going to pay you, write it off. You write off the debt, it lowers your sales, lowers your profit, less tax you're going to pay SARS. Okay, if you're VAT registered, when you write it off, it comes back and writes off on your VAT, you might increase your refund on your next VAT cycle. Okay, it's important to do this. Okay, so just be aware of those things. Creditors are people you obviously owe. And you'll obviously owe people money when your debtors don't pay you, have cash flow issues. You're now going to be owing other people money. A good thing to do is when you see how much it is, go to your debtors and say, I'm sorry, your actual creditors. If I'm getting some funds in, if I come and pay you a lump sum, I'll give you cash, can you give me 5% off or 10% off? A lot of people will take that deal. So you might be able to settle your actual creditors and save yourself money. So there's more cash inside your bank. Okay. So just think about those type of things. So we look at those. We want to track what it is in your financials, and then assets. All the tools you use in your job, the hardware, the stock, if you have a thing, all of those things take into account. And why you want to record everything. Obviously, you like them and depreciate the assets. And depreciation is not a real expense. So it's not an expense in the sense that you spent money. You already bought the asset, and now SARS lets you write off a portion of that asset. And it goes against your income statement. So now you've got this expense, which is not real, but it lowers your tax. Okay, so bear that in mind. So go find everything that you use inside your business, even if you had it in the past. You didn't buy it now. Get your accountant, bring it in your books, claim the deemed VAT, raise the value, and then write it off. So you pay less tax. Very, very important. And why it's key also is that when you're going for funding, your debtors, your bank, obviously, if it's positive, your debtors who owe you money and your assets are seen favorably at the bank or any funder, because that's your ability to potentially pay their money back, or you turn that into cash flow to grow your company. Okay. Am I making sense? You guys, okay. I don't want to use the same wording as we use in the talk. I know it's very much the same topic, but I'll just have a different approach on it. So maybe it'll help sort of formulate an understanding. Okay. Cool. So what we would normally do, and make your accountant do this, make sure they use the proper company name as it is at CRPC. Too often you'll be chatting with your accountant, it's very casual. It's like, no, it's like you give a name like whatever your company, and they go and they write that name down. But meanwhile, at SIPC, it's Tyron and Ken SME.TAX accounting practice. But he's just done the thing called SME.TAX. So just make sure it's the proper name, right registration numbers, all those type of things. Okay. As I was going on earlier, we are going through all of these things. We check debtors, creditors, do they owe you the money? What assets do you have? Is there a loan against the asset? Do you have to pay it down? So these are all the things your actual accountant should be asking you. Okay, because if they're not, your books are not going to be right. You're not going to have the right numbers inside there. You're probably going to overpay tax. And the one thing we've seen is you're going to end up overpaying tax because you haven't accounted for all your assets, which means that you can't write them off per header. You haven't accounted all your debtors, so you haven't written them off, so your sales still appear higher. So have them go through them. I mean, I don't want to do an accounting lesson because you don't need to know accounting. You just need to be able to understand the concept. So when you ask the question, the person whose job it is to know accounting, the accountant, they can give you an answer. And it's not getting, they refer them to our video. Okay. Because you're going to get a bill from SARS, which you don't want. So rather make sure it's all in order. If there's no VAT, the leniency in terms of do I have to prove an invoice is a lot lighter because obviously the money's gone out your bank. You can see it on the bank statement. So you can claim the expense, but you might not have an invoice. So you don't want to claim the VAT. So if you're not VAT registered, it is a bit more lenient in terms of what you can claim and can't claim. Okay. Okay, for us, okay, these are things internally that we're going, checking what notes. So have notes about your business. Where did I get this asset from? I don't know. It was always inside my sister's spare room. So I've taken the desks, her kids use them for school. So I've now taken them and used them in my company. She gave them to me. You can put that in your assets. Create your loan account. Where did I do this? And just make notes for yourself where these assets come from, what they cost you. You might have acquired them over years and years. We've had clients, and I might have told this story. We had clients who've over years, like especially tradesmen, plumbers, motor mechanics, bricklayers, tradesmen accumulate tools over time with their job and things like that. And then they leave their job and start their own trade. And then what happens is they're using the tools they've acquired over the years. They've been inside the garage, whatever. That could be over R1 million worth of tools that you're not thinking because you got it from a buddy. He was cleaning out his garage. And I'll take it. You went to a pawn shop and you picked it up and you got it for 10 Rand, but it's actually worth 150 Rand. That's an incredibly valuable asset. So make those notes. What are those things for? Where did you get them? Rough value. Your accountant must bring all that stuff in. So just sort of help them do their job better. Okay. Cool. This is really where it kicks in. Before I get into the tax side, do you guys understand the value of the annual financial statement and the details? Okay, so the question is the deemed assets. So the assets you sort of accumulate at a time, you want to bring them into the company. How do you record it? Okay, so there's two ways. We go for the most, the one that's best for your company. So if because remember, you've acquired them and you're separate from your company. So you now have gone and got something for 10 Rand, but it's worth 150, or you got it from your sister, your brother, your uncle, you cleaned out his garage and you kept the tools. You now going to sell that to the company, and you want to sell it to the company at a market sort of price. So there'll be a transaction between you, the individual, and your company. You sell it into the company. There's no capital gains. There's no story there. Now you have a loan account. The company owes you the money. And there's asset in both ways. Now you've got an asset and the company owes you money. So in future, when you get money from the company, you can draw it out tax-free. So you want to get it as high as into the sort of replacement market value, because there'll be second-hand goods. So what is the replacement second-hand value from that? That's the value you want to bring in. It gives it much higher, okay? Which makes your depreciation higher, which helps you offset your tax more and lowers your tax bill.
And that also applies in assets.
So trust, the question is, do you have a trust or does the trust be seen as an asset? So a trust is another vehicle like a company or things like that. So trusts can't own companies. Companies can't own trusts. Trusts can own companies because trusts are seen as individuals, as an individual. So that's why a company can't own a trust. Because slavery was abolished, and that's what it is. Because you're seen as an individual, the trust is seen, a company cannot own people. Okay, so that won't be an asset in that sense. But for the trust, the company can be an asset. You see, so the trust can have its trustees and its beneficiaries, and the business activities taking place inside the company, because it's way more tax efficient. Tax is only, maybe as a small business might only be 10% on average, but in a trust it's 45. So you don't want to be trading in a trust, because tax is like personal tax, seen as an individual. So you could be paying 45% tax in your trust. So the company does all the trading activities, lower tax rate, and in the trust hands, the company's an asset. You see, does that help? You can't do it the other way around, because it was CCs as well. So CC is also seen as individuals. So a company couldn't own a CC, but a CC could own a company. You see, like a person can own a thing, a company. A company can't own a person. So that's why you want to just switch it the other way around. Does that help?
Yeah, absolutely. By that people.
Do that. Please do that, because it's harder to fix it after you sign.
Yeah.
Yeah, no, 100%. And the call's free, so please phone us, ask. Okay, anything else? Questions on this? Okay, cool. So the question is, what sort of, and depreciation, to use. So normally in accounting, there's straight line, which will be 5 years, 10 years. So there's a whole formula that they have. So a large asset like a building, 20 years, cars, 5 years, computers, 5 years. But now small business corporation tax, there's a different formula. There's an accelerated formula, which we'll discuss now. So if you don't mind me holding off, we'll get into it with the tax on the thing. But there are two, and small business allows you to accelerate it. Okay. Anything else on the annual financial statements before we go inside there? Ken, is anything online? Okay, I'm getting good at this now. All the oaks online are sleeping. They checked in and went out. Cool. So small business corporations tax. I'm going to repeat this ad nauseum because you've heard me say this at least 3 or 4 times in this year's talks. Check if you're a small business corporation. Please, guys, please, please, please. That's going to save you a lot of money. And the money is not just tax. The tax is the small part of it. The depreciation, that the question you're raising, That is the saving, not the tax. Okay, so you've got to run through these things with your business. Just as a simple rule of thumb, any retail company, spaza shop, motor mechanic, if I'm selling Fed Cook at the taxi rank, and I'm going simple things in terms of even checkers, anything where you acquiring something, if you're doing anything to it, or if you're just acquiring it and selling it on, where it's retail, you would generally be a small business corporation. Okay. Accountants like myself, you're selling time. So if you're an estate agent or you sell time, you're not going to be a small business corporation because you're personally doing the work, except where you have 3 or more staff who are not family. Okay, those are the general rules around that. I mean, I can go through each one of these pieces. And then obviously the threshold is 20 million rand a year. And a lot of people think, wow, 20 million, I wouldn't be a small business. So, but it is. Small business is actually 50 million rand. But for the tax planning, they've lowered it down and made it 20. So small business, 50 million and down. Medium, 50 to about 500 million rand. And above 500 million rand, you start to go into large business. And obviously by country, it'll be US dollars, pounds, but similar ranges. Okay. So these are the most important aspects of this, is that retail, you're more than likely to be it. If you're buying something, you're adding value to it and you're selling it, you'll be a small business. If you personal service, you're selling your time, have 3 people unrelated to you, not family, who are also inside the business, then you actually qualify. Okay. Turnover must be 20 bar or less. Okay. And you can't own another business. So the trick is, if you were a 30 million rand business, you think, sorted, I'll just register 2. 15 and 15, I'm in. No. So it says, no, you can't. But there are ways around that. Tax planning. Your wife can own a business. You can own a business. Your kids can own a business. You can own a business. So there are tax planning things around that. But those are things to be aware of. Okay. And it'll be different for every person. So I don't need to dig too deep. Pardon? No, this, so on the family side is where you employ them. Employees can't be family. But if you have 2 types of business, say I've got a retail store and I've got a truck, and it's all under one entity, I could split that business in 2 and have a retail store and a logistics company. I can run one, my wife can run the other, my brother can run the other one, in theory, but on paper, that's what it was like. Even if I'm running the both, then it's still fine. It fits within the tax law because we're individual taxpayers and they're individual companies. Okay. So, I mean, and it will vary from circumstance to circumstance. So just bear that in mind. Okay. Does that help? Good. Okay, cool. So the real saving, once you meet all these terms, the real saving is not the tax. I'm going to just skip forward to the tax calc, just so you guys can see. Up to 550,000 rand profit. That's not turnover, that's profit. You're going to roughly pay about 10% in tax. So 57,000 rand, a little bit over 10%. Okay. So you're saving 90,000 rand. That's the tax part of it for being a small business. And 90,000 is meaningful. It can hire a junior for a year. So it pays half someone's wage. You could buy a small car. I mean, I remember we started doing these talks. It was a little bit higher. It was about 92,000. A Datsun Go. Remember the Datsun Go's? You could buy one of those cash for 90,000. So if your tax saving is 90,000, you go buy the asset for 90,000 cash. So that's what the point of this is, that people can then, whatever they're saving, because entrepreneurs can't get their hands on money. So if I don't have to give it to SARS, what am I going to do with it? I'm going to invest it into my company. That's the goal of what this is all about. But the saving then is actually, I want to go back now to the depreciation. The depreciation is where the savings are at, because you write those assets off faster. So if you've got a laptop, if you're doing electronic style stuff, even in your work, you're buying electronics, servers, computers, that you write the thing off in the first year. So you're not splitting it over 5 years or anything like that. First year, you have it, you write it off, which is a good saving. If you've got other assets like motor vehicles, things like that, you write it off 50% in the first year, 30% in the second year, and the last 20% in the third year. So essentially in 3 years, you're writing it instead of over 5 years. And people often think, well, how's that more beneficial than the 90,000 Rand tax I would have saved on my 550,000 Rand profit? So let's use the example of the Datsun Go, but I'll extrapolate it. So we had a client who made juice, orange juice. And he bought a plant, like a bottling plant. It was about a bar, roughly. But the bank wouldn't finance him for a truck. So he had this bottling plant, cost him R1 million. The end of the first year, his profit was now, so just go to the tax side of it, his profit was nearly R1 million. So you would have paid 57,000 Rand plus 27% of the other 500,000 Rand if you made R1 million. So that would have been another 200,000 Rand in tax. But because he could take that plant, that bottling plant, right off 50%, so his depreciation lowered his tax from R1 million to just under 550,000. So he saved now not just 90,000 in tax, he saved nearly 300,000 Rand in tax. He could use that deposit for his truck, and then the truck was about, I don't know, I'm going over a bar, maybe a bar and a half. So now the next year, he's got R1 million odd Rand asset in his truck. Now he's got a bottling plant and he's got a truck, which means his profits have gone up. Again, his profits were much higher, but he could write half of the truck off, 30% of the bottling plant. So now we're going 800,000 on the truck, another like 300,000 Rand on the bottling plant. His tax again was under 100,000 Rand. That is the value. The depreciation is where it really counts. The tax is 90,000 Rand. The difference, that's all you're saving. It's the assets, that's where the actual value is. Because then you can have your money up front and you can use it to buy the next asset. And you depreciate that. Because what are you doing? You're growing your company. You're going to hire more staff and so on and so forth. That is the key on that. Okay, questions on small business corporation. I know it's a lot to absorb, but when you think about it like that, it's like, holy shit. Me buying a truck could mean I don't pay tax for 2 years. How's that? Eh? And your I tell you now, your accountant is not going to ask you about this. Accountants go to school, and when they train accountants, you know what they train accountants? You're going to go work at a big company, or you're going to go work at a big accounting firm. And big accounting firms do accounting for big companies, not for SMEs. So when you go study and you get to the section on small business tax, they go pages 300 to 450. You read them on your own time. You're never going to use them ever. Well, 80 companies in the country are small business. 80% of the companies need small business corporations tax, and your accountant doesn't bloody know it. So remember this and ask them the question. This will save you more money, even if they charge you 10,000 Rand to do your stuff. This will save you more money. It'll be worth the money spent. Okay, and if he doesn't know it or she doesn't know it, find another accountant. Okay. Anything else? Questions on that? Is there anything online? Pardon? Okay, yeah. So then on the, thank you. Thanks, Blondie. So then on the depreciation that you asked earlier, the difference. These are the differences. So if you're not a small business, you'll do straight line, generally over 5 years. So you'll write these assets off over 5 years, 20% each year. And or you do the accelerated version, as we see now on small business. Okay, so that's why it's important to know what your company actually qualifies at, because this is definitely way better than writing your assets off over 5 years. Helps your cash flow and things like that. Okay. Anything else? Guys, this talk will be up on Friday. It's the end of the, bless you. It's the end of the financial year on the 29th. Okay. Go listen to this talk when you're preparing your stuff, when you're talking to your accountant. But you're going to have to file RP6 on the 29th by the latest. Even if you owe no tax and your RP6 is nil, it's going to be filed. But you're going to need this information to have that conversation with your actual accountant so that you know what you're filing if you're owing. Because it's even important for losses. So just because you owe no tax, don't file a null return. If you've got a loss, file the loss, because the loss carries forward to the next year. So this year, I didn't make any money. I had 300,000 Rand loss, no tax. Next year, because I've learned my adopt the SME, I paid attention at these talks for the whole year. Next year, I've made 400,000 Rand profit. But if I don't carry forward the 300,000 Rand loss from last year, I'm going to pay tax on 400,000 Rand instead of paying tax on 100,000. Because the loss from this year gets subtracted from the profit of next year. And if you've got a loss from the previous year, they accumulate. So while we're starting up as a small business, accumulate your losses. It might be 50 this year, 100 next year, 200. And in year 5, when you've finally got everything going, you're making profits, all these losses will override that. Yeah, does that make sense? Record the losses, because that's what you're going to use to offset your tax in the future. Okay, so this, as I said, this talk's up on Friday. Go watch it. Even go watch the earlier one from August with the management accounts, to understand the management accounts. And let your accountant, it doesn't have to be us, guys. We do this to share the information. If other accountants follow our talks to learn from what we're doing. So if there's something you see your accountant doesn't understand, let them watch our videos, because you're going to benefit out of it. They will benefit, and they'll benefit other SMEs. Okay. So on Valentine's Day today, the message is show your business some love. Okay. All right. It's like self-love. All right, super. Guys, thank you very much. We do have some snacks and stuff over there. I think we might have been a bit quick. Sorry, man, before we go.
Thank you.
It's still a small business. Do you really need to declare that to SARS, or you just submit the zeros?
Okay, so the question is, if you're a small business and you're making small little profits, do you really have to submit that to SARS? Maybe we're going to edit this part out of the conversation, Ed. You have to submit everything to SARS. Pay unto Caesar what is due to Caesar. So we might not agree with how our taxes are being used, but by law, you have to pay the tax. This is why you want your accountant to understand what we've spoken about, because then you're going to pay less tax. But whenever you work it out and calculate, if it comes down to 10 Rand tax, pay the 10 Rand tax. You'll go to jail. Jail's not worth 10 Rand. Not, and if you got a buddy who says, no one SARS never checks, then you'll be the person they check, I promise you. Okay. So rather submit the returns. If you don't have the money, so let's just separate those things. Sorry, Lonnie. Separate the two things out. One is submitting forms. Okay. If you do not submit the forms, it's a criminal offense. They can send the police to your house and fetch you. And the point of that is to make you submit the forms. Because what SARS wants to know is, what do we owe SARS? Because SARS doesn't know. They rely on us, you, to tell them what you owe them. Because how else do they know? They don't know. You do bookkeeping, you file your returns, your employer files, pay as you earn. SARS does not know until the business owner tells SARS what I owe you. So not submitting the form is a criminal offense. So they can force you to submit the form. Now, if you owe money, that's a civil offense. What happens if you owe someone money? They'll sue you for it. And you can make a payment arrangement. So rather do that. If you haven't got the money, rather submit the form and pay SARS over 6 months. You can do that. They'll let you do it. Jail is not worth it. If you think your life is bad now, it's worse in jail, I promise you. A lot worse in jail. So rather submit it and pay it over time. And if you can't do it over 6 months, SARS lets you pay it over 12 months. So just chip away at it. And also, if you don't submit, there's penalties. So your 10 Rand might become 25 Rand within a year, which is a lot worse. And they'll charge you admin penalties, penalties for non-submission. They can get us to as much as 200% of the amount, and you'll still go to jail. Not worth it. Not worth it. No. The only department that works in the government is SARS. Because they need the money. Okay. So, ma'am, please do not submit your tax, please. Please. Okay. Anything else, guys?
So I was just going to add,
Okay, sorry.
especially in businesses when you're an SPC, small business corporation, making profit doesn't necessarily mean that you're going to pay tax. As we said, you might be making profit, but if you follow all those requirements of an SPC, you find to make profit, but you're not liable for tax.
So on that, it's exactly Mlondi said. Thanks. Remember, you make 95,000 in profit. There's no tax as a small business corporation. So it's not worth it. Make sure you're a small business corporation. If your accountant doesn't know, let them listen to the talk. And you invariably don't pay tax. I can't remember what the stats are now. I think in the small business corporation sort of like actual part of the market, like 80% of them do not pay tax. That's how high it is, 80%. And it might be higher now because obviously the economy has been bad. But 80% of the small businesses do not pay tax because the small business corporation, and also because it's just so bloody hard to make money. So there is no profit. So rather do that. Make your accountant understand this. Don't go to jail, please. Yeah. So you can have a profit and not pay tax. It's in the legislation. Take it from me, promise. Does that. Okay, anything else on that, guys? Okay, before we wrap up, I know we've gone through a lot. I say this often, but none of you ever email me. I'm feeling a bit lonely. If you've got questions, guys, just send us a mail, please. Someone from the office will give you a shout. Email info@sme.tax. It goes to Edward. Ed loves to answer emails, so he will respond. And invariably myself, Kagiso, Edward, Bjorn, Dinah, someone will talk to you about what you're asking. And it's free. Okay, so please, guys, really, I say this every time I do this talk for 2 years. I think I might have had one email asking for something. Okay, use it, please. I don't need the help. I know these rules. No, it's free. Like this talk. And they say nothing for Mahala. This is free. All right. Super, guys. Thank you very much. We appreciate it. Oh, hold on. One more. So the cheapest and easiest is Excel or Google Sheets. It's generally free if you've got an account, Gmail account. So you can just keep track of sales, your expenses. There are a number of free accounts, like Wave used to be one. I don't know if they're still around. I know Canada stopped them from operating in a number of countries. Soho is around. So just go onto online and just free accounting platforms. And there are a number of them. But the problem is we're not accountants. And don't as an entrepreneur try to be an accountant. You're going to give yourself a headache because we've seen it where people do these entrepreneur things and they're trying to teach the entrepreneur to do accounting. You don't want to be doing that. The easiest thing, I promise you, the easiest thing to do is take Excel, your sales, record your sales. Yeah, I'll go back one step. The easiest thing to do is get a free accounting platform, okay, and only invoice from there. So your invoices look nice and smart and things like that. Invoice from there, so it looks nice. Because otherwise, it's hard to do a Word invoice or an Excel invoice every month because then your invoices have to run in sequence. And if you're doing it on a Word or Excel, you're going to forget to, what was my last invoice? And suddenly you find you've got 300 invoice 11s. We've seen it. So use a accounting platform for the invoicing side. That's all you really want to use. Nice invoice. It looks pretty, looks good. Everything else keep on your Excel document. You just record petrol, stock, but have the slips, obviously. That is more valuable to an accountant than trying to, because what they're going to do is they're going to download from your free software, they're going to download it to Excel. And it's going to be an Excel, which is exactly what you could have done in Excel or Google Sheets. And they're going to jiggle things around, ask you some question, and they're going to draft your annual financial statements. So don't give yourself a headache. Okay. I know there was some software, like we've got a thing called HubDoc, where you just take the pictures of your slips and it codes it into the accounting platform, but that normally costs money. I think it's NetBank. There might be NetBank, one of the banks, NetBank might be. They've got one of those personal finance app type things. And you can actually use that to take the pictures of your expenses and it'll do the same exercise. It'll come onto a document where I spend so much on petrol, I spend so much on entertainment for your personal finances. But in a small business, use that. That's free. And it'll do the same thing. And your slips are online forever, as long as you need them. Okay. Don't spend money unless you have it. Don't spend money unless it makes you money. Okay. Cool. Anything else? Any other questions? You ladies are new to the talks. You must go back and listen to all of them. There'll be an exam next week. You missed the beginning. We're all writing exam next week. All right, guys. Ed, thank you very much. Thank you for the team online. You guys all out there yet?
Yes, we're still here. We're still here.
All right, super.
Thanks, Tyrone.
Thanks so much.
Thanks, Ed. Thanks, guys.
Thanks,
Enjoy.
everybody.
Ciao.